Good evening. I want to welcome everybody to the final panel of today's conference, Panel 3, International Perspective. Can we build a globally harmonized regime in international perspective? Of course, I want to join my colleagues in thanking Ondrej for hosting us all at this event, as well as for all the tremendous work you have done to spearhead the work of the Parliament in drafting the digital finance package, which is great. As the final panel, with our previous panels running late, we're in the coveted position of being the last session before the cocktail, and the networking at the same time. My colleagues have a tremendous panel of very thoughtful and knowledgeable people who've done a lot of preparation. I want to make sure everybody gets to hear these views. I have asked my colleague to give us time signals just as the panel is winding down, but in order to have an international perspective, I've asked her to do it in base 12, because some civilizations operate in different standards. So hopefully we'll all be able to make sense of that. So with that, I'll ask the panelists, starting with Mr. Pham, to briefly introduce themselves and give their disclaimers. I know at least a couple of you have those. And then I'll introduce the topic and we'll jump right in. So from this side across.
Hello, everybody.
Yeah.
Hello, everyone. It's wonderful to be here. Thank you so much. I'm Commissioner Pham from the U.S. Commodity Futures Trading Commission. The views that I share today are just those of my own in my official capacity as a commissioner and do not necessarily represent that of the CFTC, any other commissioner, or the U.S. government.
They've all met, the people who are just tuning in now.
Indeed. Ondrej, Kovařík, member of the European Parliament.
Hello, everyone. I'm Jakub Mihaliga, around International Institutional Affairs at ESMA, European Securities Markets Authority, and I'm very glad to be back in the Parliament, because before joining ESMA 10 years ago, I worked here, and I was also part of the Renew group. So very glad to be here. Thank you.
Hi everyone, I'm Tom Mutton. I'm from the Bank of England. I'm the Director for FinTech and the Digital Pound. It's great to be back in the European Parliament. The last time I was here was when Mark Carney was talking to the Econ Committee just before Brexit, so this is a much more pleasant experience.
Peter Zilgalvis. I'm a judge at the General Court, Court of Justice of the European Union in Luxembourg, and I think the last time I was in the European Parliament was representing the European Commission, and among other things there, I co-chaired the FinTech Task Force with Peter Kerstens and had a lot of good memories. And before that, I was in the Council of Europe and the World Bank and a visiting fellow at the University of Oxford, among other things.
Great. And I'm Jeff Banman. I'm a board director at GBBC, former CFTC official. And I think my last time visiting the European Parliament was in 2015, presenting data about one-day gross versus two-day net margin when the topic of the status of clearinghouses between the EU and the US was up. Hopefully, I think we have a more kind of convivial situation. So harmonization. When we speak of global harmonization, what do we mean? And harmonization compared to what? On a scale of A to G in musical harmony, what else would we consider harmonized in the field of financial regulation? Is it harmony if all the notes are the same, or if the notes are different and yet they have some kind of alignment or musical sound to them? One example that has occupied a lot of attention in the international community has been harmonization in the swaps market. We'll talk about that a little bit later in the panel. That's consumed enormous energy and attention over the last 15 years. But I think we should have an understanding, what is it that we mean by harmonization, or what are the facets of harmonization that we should be considering? Does it refer to standards, data, consistency of supervisory practices, cooperation of supervision, industry practices, or some combination of those? In many areas of finance, it's truly jurisdiction by jurisdiction, and there's not even an expectation necessarily of harmonization. And yet, as Ondrej referred to, earlier in this conference, the nature of the products that we're talking about, they're global, they're borderless, and so they lend themselves to sort of a need or expectation of potential harmonization across borders. We can ask ourselves on the subject of harmonization, are there already international standards as Europe goes through the process of implementing the various levels of MiCA implementation? Are there international standards? Can these be developed? Do they already exist? Does the digital finance regime show us the way, or will the Brussels effect get us there? Is there a set of standards like the PFMIs for infrastructures, an assessment framework? And has MiCA preceded the international standards, or will it be the one to precipitate them? The unique challenges posed by this asset class, the digital assets products, global products that move at the speed of the Internet of value, self-sovereignty of assets, the rapid pace of innovation and change, and of course the risk of regulatory arbitrage with VPNs at the fingertips of virtually anybody who's computer literate. So the stage is set for a very interesting and timely discussion. And with that, I'd like to first turn to Ondrej to shed some views on to what extent is the global or international harmonization a goal of the digital finance package. Obviously, there's not a specific third country framework, and yet there's harmonization across the Union. So what sort of harmonization is important, and how do you think about the philosophy of harmonization in this context?
Yes, thank you very much. I think, indeed, very, very important points. When we discussed the rules on markets and crypto assets, but also the others like digital operational resilience, which is basically a cybersecurity measure for financial services providers. We obviously focus on setting rules for the single market, so the EU 27. But I think it's quite clear that there was always this ambition that this can actually be a sort of an exercise that can fuel the global debate on the harmonization. And I think the key, again, exactly as you mentioned, there's a global nature of the services and the products that we are trying to sort of fit in the regulatory framework, and not only to enhance in effectiveness of the regulatory framework and the enforcement of it, but I think also in terms of providing the industry a sort of at least hint of similarity or better harmonized rules across the globe when they decide to actually roll out their products and services even beyond the EU market or coming to the EU market from other jurisdictions. So the ambition was definitely there, and we will, I think, only see in future if this is a case. But I think there's one important thing which I always say in terms of whether, for instance, MiCA rules can be a standard setter for the global discussion. I believe they can, but there's one condition which is extremely important. It has to be understood that MiCA rules are basically, until now, rules on paper. They will be fully applied as of the end of this year and the beginning of next year. And I think only if the application, if we really succeed in its application, if we go through the tests of the various milestones that MiCA sets for the practice, that the stakeholders will understand the processes, the licensing process, the supervision process, etc. Only then MiCA can actually be a good example to follow. If we fail in application, I wouldn't understand, reasons why all the others will try to copy it if they see that there are issues linked in with the practical application and implementation of those rules. So I think we will be in critical phase as of this year or next year to make sure that these things are clear, that the ambition that we translated into the regulatory framework will be visible in practice, and that the stakeholders will be actually, and authorities as well, will be credible in the enforcement of those rules.
Yeah, no, very, very important to bear in mind. It makes a lot of sense that, I mean, I think a lot of people around the world think it's a very balanced, sensible piece of legislation. And now, as we move into the next phase, the implementation, the member states, the national competent authorities by the entities. And so in the absence, just as a quick follow-up, in the absence of a specific, third country framework, you alluded to the fact that, the entities from abroad may come here, entities from here may go abroad. Is the thought to sort of, as part of the implementation, see how that goes and then think about how third countries might relate as it goes forward?
It is definitely part of that. I think it has been said earlier, maybe Jakub will mention it, the ongoing consultation on reverse solicitation process. I think this is exactly one of the mechanisms that we have in the regulation that will sort of link the EU and non-EU jurisdictions and make these rules clear when it comes to active provision of the services on the EU market. I think we didn't specifically provide for some adequacy decisions or sort of aligning the regimes in MiCA, but this can be definitely one of the additions in the next stage after the review. But I think these would be, let's say, the practical legal issues to deal with. On top of that, I believe, and this is definitely happening, I think that the Commission representatives would be able to confirm that it's active participation of the EU, be it the Commission or the Member States, also in international fora, the FSB, G20 format, OECD, other relevant formats that discuss these issues, to make sure that whatever happens on the EU level is also sort of made known on this international level, but and also inspiring the discussion, so that these are not happening in isolation in the EU only.
Great, thank you. Pateris, prior to becoming a judge, you worked at the Commission on a lot of the initial development of the approach to digital assets and the digital finance package. You were active in DG Connect and much of the initial work. How do you think about, kind of the first mover position of the EU in legislating in digital finance and some of these other technology areas?
Well, thank you very much for this question, and emphasizing that now in my role as a judge, as we remind ourselves often in our internal discussions, we're not the legislator, we're not the Parliament or the Council or the Commission proposing legislation, but looking at this issue from the perspective of the treaty, Article 19 says the Court of Justice shall ensure in the interpretation and application of the treaties the law is observed. And a very important objective that is relevant here in the treaty is in Article 3, a highly competitive social market economy. If we talk about a highly competitive market economy today, that is inevitably an innovative economy. Innovation is power. Mustafa Suleiman wrote not long ago in The Coming Wave. It's clear we're here in a context with American friends and colleagues and the European Union, that if our two economies are not innovative, then we are irrelevant in the global geopolitics. Obviously, there are counterparts in China and others that are also very much aiming for innovation. Looking at that same article, you have social. What does social mean? Along with creating value that can be shared for the common projects like environmental protection, social welfare, defense, it also means protection of the consumer. And this is where these legislative proposals, I think, adopted legislation, are very important and essential for the European economy. The challenge for the regulators and the courts right now is considering the specific features of the digital economy while ensuring proper application of, for instance, which is very relevant for me in the general court, competition law and protection of consumers. One of the things that these legislative instruments has introduced, one of the innovations, which came from, and we get into a little bit this quandary, came from the European Union, but the UK, when it was still in the European Union, are the regulatory sandboxes from the Financial Conduct Authority in 2013, 2014. This is when I was a visiting fellow at the University of Oxford, and in fact I visited the FCA multiple times right before they introduced the regulatory sandboxes. And there's other challenges for the regulators and supervisors that are arising from tech. In addressing this new part of the economy, you can say there's two approaches to competition, which again is an essential part of this competitive marketing economy: policing competition and creating competition. You can say that the EU initiatives, the proposed revision of PSD2, PSD3, and the Payment Services Regulation, PSR, MiCA, the Markets in Crypto Assets Regulation, alongside the Digital Services Act package, the Digital Services Act, the Digital Markets Act, and the Data Act, are all aspects of creating competition and ensuring that competition works, not just in the context of competition sanctions. An important aspect of parts of these, or some of these regulations, is passporting. This has been shown by evidence to be the source of many of Europe's unicorns in the areas where we have passporting. This is where we have more unicorns, more competitive parts of our economy, where we don't, and where we still have fragmentation, where we are doing much less well vis-a-vis the rest of the global economy, or that is to say the most active and dynamic other economic actors. The first mover bristles effect, it's something that is observed. It's important. For me, I think it goes hand in hand with the innovation, because it's not just regulating the way that innovation is introduced into the economy, but producing innovation in the European economy itself while protecting the consumer. And it's a challenge that the regulators, which I'm not, I'm in the judiciary, have to deal with, but in a way we have a perspective on it. For instance, in regulatory supervision of things like generative artificial intelligence, which will inevitably come also, or is already in this sphere of digital finance, how will the regulator, the supervisor, be able to follow what the artificial intelligence is doing with supervisory tools that utilize artificial intelligence themselves? Something I'll just say a couple of words on. We ourselves at the Court of Justice, we have a Court of Justice artificial intelligence strategy, which is published on our website and our LinkedIn, among other things. And we're looking ourselves how and in what way we can ethically and correctly utilize large language models to make the provision of justice and access to justice, access also to the case law, available in more languages to more citizens, and actually more people around the world, and as part of a global judicial dialogue, talking with other higher courts in other jurisdictions globally, the way that they're going to be utilizing artificial intelligence. So with that, perhaps I'll finish.
Great, Petros. Thank you much for all that perspective. It's the kind of the origins, the impact on consumers, as well as I think some of these issues around artificial intelligence and explainability of algorithms and strategies are we're going to be wrestling with for quite some time to come, at least until they do it for us. Commissioner, you've certainly have devoted in your time as commissioner, as well as at the Commission and in industry before then, an enormous amount of your time and attention and energy to the international sphere. So it's great to have you on this panel. How would you assess, where the U.S. is today in terms of global harmonization on digital assets, and do you find that the digital finance package, and the rest of the EU's approach, might provide a relevant or attractive model for the U.S. or internationally to follow?
Well, first, I want to thank you so much for First, I want to thank you so much for hosting this event. It's wonderful to be here. My first time back in Brussels after 25 years, believe it or not. So it was wonderful to go to the Grand Place. And I want to thank GBBC for hosting this terrific event. So these are interesting questions, and I think it's always good to sort of take a stock take. When the digital finance package was first announced, I actually was working on it, but from the private sector standpoint. And I think one of the things that I appreciate about the European approach is the willingness and the drive to create the regulatory clarity first, to do the regulations first, and to ensure that activities are conducted with a level playing field within the EU, certainly, and the implications for the broader world. I have said, half jokingly in the past, that the tables have turned, and now the EU is the rule maker, and the U.S. is the rule taker. I don't want to skip ahead to the swaps portion of the discussion, but I have a comment there as well. So, look, I think with the digital finance package, it makes a lot of sense, the approach that the European Union has taken, but I'll provide a different view, which is that given the unique nature of the United States, given our system of federalism, and given the importance of states and state regulation to the United States, I'm not sure that we would have been able to take the same approach. That's not typically the American way. And the other thing that I'll note about the digital finance package is that let's take MiCA, for example. So with stable coins, you essentially have a narrow bank. People have tried for probably decades at this point to establish narrow banks in the U.S. under our dual banking system and have not been successful. One must be mindful that in the United States, community banks are a tremendous part of the economic growth for SMEs. And so it is something where there is a very strong concern that you would not want to have a narrow bank compromise safety and soundness of the banking system, introduce risks into the system if they are not prudentially supervised to the same extent as banks with capital and risk management requirements, but then at the same time that they are not cannibalizing the important roles that community banks play not only to the U.S. Financial system but to the United States communities, to local and communities and to states. So I think that's something that is very interesting. I wonder if stablecoin legislation will be successful in the United States given the various attempts to bring back, so to speak, industrial loan companies, ILCs, which is a sort of another type of basically a narrow bank. That has not been successful. There has been legislation actually against that. So I think it will be interesting to see what happens with stablecoins. I also think there may still be some room for discussion as to whether or not the issuance function ought to be separated from the management function. And I do think people query, why would you not essentially have a non-bank stablecoin regulated like any other non-bank financial company under state regulation with perhaps a federal overlay similar to the dual banking system. And for the management of the reserves, there are various existing regulatory frameworks that could apply. I do actually agree with the SEC from time to time, and so I think the framework of stable value funds or money market funds is something that can be compelling for the management of the stablecoin reserves. But of course, the digital finance package is more than just MiCA, and so I think when it comes to digital operational resilience, I think that is a very difficult discussion to have in the United States, given the approach in the U.S. to the regulation of the Internet and some of the different risks and impacts to society that have been coming out. People like the Internet and they like their digital services, and there is obviously, as everybody knows, a very strong bent towards individualism and freedom of everything in the United States. So I think when people start to feel that there could be legislation or regulation that could impede their access to digital services by discouraging the provision of digital services by whether it's big techs or new startups. I think I will not touch upon sustainable finance. So I'll leave that to others to discuss. I know that was a key aspect of the digital finance package. I think the open banking, though, is where I do think that there's some promising developments. I think that in the U.S., they're coming around to open banking and some of the benefits that can provide, particularly as you see more and more fintechs. So I think that is something that could be interesting, although there are legal challenges, I believe, to the CFPB's rule over Dodd-Frank Section 1033, which was, I think, an attempt to address some of the initiatives around open banking. Perhaps I'll leave it there unless there was a specific aspect to touch upon.
No, I think that's that's great. I think you've highlighted some structural features of the kind of U.S. federalism versus the different structure and different participants.
I know. I forgot to provide the sum up. So where is the U.S. compared to the rest of the world?
Right.
I must not forget the punchline. I think actually, given that the U.S., and you wouldn't necessarily know from the political discourse in Washington, but the U.S. has been very active in participating, obviously, in the international fora, in the FSB. The SEC is actually the co-lead of the IOSCO FinTech Task Force, which is looking at digital assets, among other things, together with the MAS, and then, of course, the Basel Committee. And the Treasury Department has been instrumental in coordinating much of that international engagement. So while the public and the political narrative in the U.S. is negative on digital assets, I think if you actually look at what's happening in the FSB and IOSCO and the Basel Committee, there's a more promising story there. And I do think this might be a circumstance where actually by the need to adhere to the international standards, it may actually pull the U.S. Into more of an alignment with the rest of the world. I think that actually probably helps the U.S. Deal with some of the political challenges that we have around digital assets. The other thing that I will note in a shameless plug for the Global Markets Advisory Committee that I sponsor, and which GBBC is co-chairing a work stream on digital asset taxonomy. At the upcoming March 6th meeting, it is expected that the GMAC will vote upon the publication and the recommendation of a digital asset taxonomy. I do believe this is the first initiative at the U.S. federal regulator level, which is, I think, quite noteworthy and worthy of commendation. But I think importantly, I hope that this is a step towards distinguishing between financial activities and non-financial or commercial activities. Because I actually think the big question in the United States is not whether it's a security or a commodity. I think it's that we need to take an activities-based approach, and is it financial activity, in which case it's same activity, same risk, same regulation, consistent with the FSB crypto asset principles. And I do feel that most of the crypto assets that are in financial services or products do fall either under banking and payment products. I think the vast majority of what's being used in capital raising is probably a security. You should get a very good securities lawyer. And then I think much of the trading activity that involves pairs is probably some kind of derivative, given that the definition of a swap is all-encompassing. So I think that really settles it. I actually have been saying that it's a bit of a boring conversation when you think about the tokenization of financial products and services, because it should just be the same financial regulation that would apply. In the commercial activity space, I think this is quite interesting because we actually would look to not the financial regulators, but I think there could be a larger role to play, certainly for the Federal Trade Commission. And I think also for the Federal Communications Commission, which largely regulates much of the requirements around Internet activities. So I think when you look at international trade, commercial, intellectual property, privacy, some of these other important aspects that come with commerce, that is going to be something to keep an eye on in the U.S. So hopeful again that this will help take a step towards regulatory clarity by creating a distinction between financial activities and commercial activities.
Yeah, it's a very, very helpful, I think, distinction. And personally working in the area of non-fungible tokens, I think this area comes up, as with the breadth of, different types of innovation. Just because something is a digital asset does not necessarily mean that a one-size-fits-all, that it should fit under securities or financial or commodities. We were having this discussion during some of us at the dinner last night, so it's very, very important. And actually, there's a very perfect transition to Jacob in terms of some of the work that ESMA has been doing, having been tasked with some of the very important blocking and tackling of the type that Ondrej was referring to in terms of the technical standards, the definitions and practicalities. So what is ESMA's kind of current focus as it relates to the digital finance package? And then hopefully we'll get to some of the work ESMA is doing in the international groups afterwards.
Yeah, many thanks, Jeff, for this. So following up on what Ondrej and also partially Caroline said on the international work. So obviously in the European cycle, once the texts have been agreed on the political level between the co-legislators, it means implementation work for ESMA. And there are various pillars of that implementation work. And looking at the digital finance package, we clearly have the implementation on DORA, so the cybersecurity operational resiliency, which is not only finalizing the technical standards, but also preparing to the oversight that will come our way, and also colleagues from the EBA and the EIOPA on the DLT pilot regime that was covered in the first package. We have also been quite active in preparing the implementing work and standards, and also helping the national competent authorities with first authorization, and I think there are 4 authorization requests, and there are more to come. And then on MiCA, actually, we have been starting working on this as soon as the text has been published in Official Journal. We've received over 30 mandates for technical standards and guidelines, and we've been consulting on them in different batches between July and last year, and then in autumn, and then there are a few more to come in the course of the first quarter this year. So it's various technical questions around authorization, governance, conflict of interest, sustainability of the tokens. Also inside information, the questions related to what is the cornerstone of our mission, namely the investor protection, so issues around distribution and reverse solicitation. So we've been focusing very much on this. It's a very good feedback from stakeholders, so thank you for of you who might have responded to some consultations, and more consultations to come. The other pillar of our implementation work is clearly ensuring the convergence, supervisory convergence in the EU. MiCA did not come without a certain legacy on the national level, and Jeff was very much involved in developing national regime in Cyprus. So Cyprus, France, and a couple of our jurisdictions in the EU started with some domestic framework as MiCA was being proposed, as being discussed. So we need to ensure that, and also MiCA has certain grandfathering clauses there. So we are helping to ensure legal certainty across the board, across the EU 27. So we're working with the NCAs and with the stakeholders on ensuring that there's a clarity on how the national regimes play with MiCA when it comes into force at the end of this year. And obviously there's also a third pillar, which is capacity building. Regulators are confronting with new topics like digitalization as a whole, which requires stepping up in terms of our expertise, our resources, so working together with national competent authorities across the EU in working on this. So maybe just a couple of points on international standards, because that was discussed just beforehand. So historically, we typically have global standards or global principles for existing market, and typically only then regional or national implementation in the course of a hard law are being implemented and followed. for digital finance and actually for sustainable finance for this work as well. The EU has gone ahead within the main objective to protect the European investors on both digital and sustainability front. Therefore, this leadership or the Brussels effect that Patrice was referring to earlier. So we had to change that sequencing. At the same time, we as ESMA, alongside also national competent authorities, have been very much involved in both IOSCO and FSB work. So we are happy to see that we have now a global standards, both on FSB and IOSCO front, clearly with IOSCO recommendations being important milestones as published in autumn last year. Maybe a couple of points, so in terms of compatibility with MiCA, because that comes across very often as a question in the international fora. We need to keep in mind that all international standards are much more high level than any of the domestic or regional implementation. So as such, the principles of MiCA are very much compatible with IOSCO FSB standards. However, we as ESMA, in the context of our implementation work, are very much bound by MiCA text. Therefore, we cannot refer to high-level standards as such. Nevertheless, I think it's a good opportunity because in the international community it does not only discuss standards but also discuss the implementation and also discuss follow-up to implementation, meaning that the jurisdictions are also assessed by international bodies like IOSCO or FSB on whether they implemented the international principles in the relevant area. So you will expect that the follow-up in the 1-2 years down the road will be looking across global regulatory landscape to see how far MiCA or other regional or domestic pieces of legislation in that area, how far they are compatible with IOSCO or FSB standards. So we'll be very much looking to work with those bodies and also with the foreign regulators with whom we also have frequent discussions through regulatory fora alongside the Commission colleagues and others to ensure that there's also a clear clarity on WICA brings forward and how far that can be used also as a blueprint for someone who might want to go further. Thank you.
Great, thanks. That's great, thanks. Tom, so thank you for your patience. Also you're head of, as I understand, the Central Bank Digital Currency Unit at the Bank of England. You previously have been responsible for fintech and previously for international. So I think you're, exceptionally prepared to be on this panel, as well as having a technology background. What do you see as the role of central banks around some of these international harmonization and international framework issues?
Well, thanks, Jeff, and thanks, everybody, for the invite for being here. One thing I absolutely 100% know for certain is nobody wants to talk about central banking at 8 o'clock at night, so I will keep this extremely brief. I think there are two questions. One is a here and now question, which is for digital assets, both current generations digital assets, but ones which may emerge. How do we make sure that the prudential requirements which are set are proportionate but rigorous and do reflect the principle of tech neutrality, which the Commissioner mentioned? It runs through everything we do, and maybe we haven't always got that right. That's a big question to reflect on. That's a here and now question. There's a question, I think, for the future. I can see that Klaus is at the back. No doubt he'll have views on this, which is not now, but at some point in the future, what sorts of digital assets, what sorts of tokenized assets may or may not need to be settled in central bank money, and what is the perimeter of central bank infrastructure? It will take some time for that question to become clear. Clearly, the provision of central bank infrastructure is a privilege. It's also a public good. But that's something that we should keep in mind, because it becomes very important for questions like interoperability, for harmonization, for cross-border operations. But as I said, access to central bank infrastructure is a public good. It's a privilege. It also comes with significant obligations. So I don't know if that's a here and now question, but it is one that increasingly I think will start to come into focus in the future.
Could you just, you mentioned interoperability just a moment ago, and also during our preparation call. Could you maybe touch briefly on what you mean by interoperability in this context, and then we'll come back to Commissioner for swaps, and then ask Ondrej to have the last word here.
So my experience of these sorts of events is if you want to talk at one of these panels and you don't want to do any prep, then you just sort of randomly use the word interoperability as much as you can, because it's almost impossible to pin you down on it. Generally, a lot of what follows is utterly banal as well. For me, it's really two dimensions. And we think about this a lot in the context of the digital pound, but also around things like stablecoins, for example, tokenized bank deposits. But it applies much more broadly. I think it's really three things. First of all, how to make sure that certain types of digital assets are interchangeable and interoperable with each other. So easy transmission between different types of digital assets. Then I think interoperability with other types of money, which could include things like central bank money. And then I think there is a third type of interoperability, which is across different types of technology stacks, and in particular, I think across different types of distributed ledger, across chains. Those terms, I think, could be disputed. I think people could challenge that premise of interoperability. I think often when people talk about interoperability, they actually mean exchange. But I think it's a really important topic, one where I think the concept of standard setting, the concept of harmonization is very important, and it requires both a policy layer and an infrastructure layer to deliver true interoperability.
Great. Thanks so much, Tom. Commissioner Pham, I know you've, going back to the subject of harmonization, using the swaps market as a potential either positive or negative example, or both. Actually, one of the big focuses over the last 15 years post the 2008-2009 great financial crisis was to introduce regulation of the swaps market consistent with the G7 pillars introduced at Pittsburgh, developing of international standards, assessments and assessment monitoring, conduct practices, registration information. Do you think swaps provide a helpful precedent for harmonization in the digital asset space? Are there things that we got right or wrong in those areas that could be useful to bear in mind as we move forward in the digital asset sphere?
Well, thank you for the question. I think that there's a lot of lessons learned to be had from the global implementation of derivatives regulatory reform, and not least of which is that, as one commissioner said during the development of the CFTC's cross-border approach to swaps and the CFTC's jurisdiction, I believe it was the CFTC's jurisdictional approach was referred to as intergalactic. And I know that for those of you in this audience and watching who have had to work through that those were challenging times, and there was a lot of good work done by various leaders of the CFTC to work on bridging some of these relationships and working towards dealing with the market fragmentation issues that developed from a not harmonized approach to the implementation of derivatives reform. And I think that the lessons learned from the market fragmentation and from the lack of regulatory cohesion are good things to keep in mind as we approach the issue of regulation of digital assets, because similarly, this has been recognized by the FSB as potentially systemic risk. And by definition, these markets are inherently global. The technology enables peer-to-peer and disintermediated structures, which does not matter, except from a legal and regulatory perspective, where you are. So I think it's important that jurisdictions come together and work on this and think about market fragmentation and regulatory cohesion as first principles, as opposed to sort of an after-the-fact patch-up job.
Thanks. Yeah, I worked for the next chairman after the intergalactic approach was introduced, and I think a lot of our work in Europe and elsewhere was trying to repair some of the collaboration and relationships after that. And I think the next chair after that as well, potentially. Yeah. So
I enjoy my European friends, and I would like to keep them.
I think you have friends all over the world, Commissioner Pham, for sure. All right. So Ondrej, to close out to today's panel, looking ahead to the next commission, the next Parliament, you've already touched on this to some extent in terms of talking about how we need to implement, on many levels, what's been designed to show that it can work in practice. So what should the next commission and Parliament be working on? It sounds like it might be a little early for them to get going on MiCA or 2, Digital Finance Package 2. What would you like them to sort of bear in mind as they get ready to assume those roles once that gets determined?
Yes, thank you. And I think very, very quickly, just to follow up on the discussions we had. I'm not a big fan of discussions about MiCA 2 because, to be honest, we never tested MiCA 1 in practice, and I think it would be sort of premature to start contemplating on what should be the next steps. There will be definitely a review process, which is already foreseen in regulation, and I think that's a good. That could be a good point actually to reconsider or review some of the provisions, but I think we are far from that. Obviously, there are some open issues that now are currently under discussion, which is decentralized finance, the NFTs, the Commission working on those, ESMA and EBA working on a number of secondary legislation, which I think this is important. So, I think one word to address your question. I think we should focus on proper implementation and enforcement. That's the real issue. And I on top of that, I was pleading for a cooperative approach in open finance area. I think we should also take our time in this application or implementation process and go through both sides, the industry and also the supervisory regulatory authorities through the learning process. It is actually a new piece of legislation that will apply to a sector. I think public authorities already have, but I think will need to gain more expertise in this area. The same for the industry, to make sure that there is a good understanding of those rules and good cooperation with authorities. And also I think not only the digital finance by definition would have no boundaries, but also it seems like they're evolving extremely fast. New technologies, new business models, new products, new services to be offered. And I think we should also make sure that the framework that we have is sort of future-proof, that will also be able to be tested by these new developments, and that there's also good understanding on both sides what these new developments would mean in terms of proper application of the rules, but on the other side also that the authorities and the supervisors understand the key features of those new developments. And I think it's very easy to say, but in practice it can be an extremely difficult task. So I think that should be our focus in next years to come. And I would also say one more thing, apart from the main topic of this panel, so work on the global harmonization of those rules, which I think would be an ongoing construction site for the years to come. It's also internally within the EU to make sure that whatever other types of regulations in the financial sector, but also beyond, we adopt, are fully consistent with the rules that are in place. So in whatever areas, data, digital services, anti-money laundering, cybersecurity, whatever we do, it's actually we are fully aligned, so that we are not creating uncertainties, double regimes, or any kind of possible even loopholes. I think this would be critical, sort of a homework for us in the European Union for the next years to come.
Great. Well, please join me in thanking the panelists. Thank you very much for hosting us.